everyone, I'm Michelle Yu. It's a special day in our New York studios. That's because our partners at Sprott Asset Management are here to talk about the recent launch of their new Silver Exchange Traded Fund. It happens to be the only U.S. listed ETF offering pure play exposure to both silver miners and physical silver. And for more on that, let's welcome in Steve Schofstall, Director of ETF Product Management at Sprott Asset Management USA. And before I get to Steve, I just want to point out first that silver is a unique commodity because it's both a precious metal and an industrial metal. So I'm going to start off by asking Steve, what should investors know about its qualities as a precious metal? Steve, it's great to see you.
It's great to be here, thanks. And it's a great lead in. Silver traditionally is known as a precious metal. It's the industrial side that's really started to take hold over the last decade or so. But when you look at its monetary uses and that use as a precious metal, what you really see is silver and both gold actually really shine in periods of high inflation, political uncertainty, decreasing interest rates, those types of environments that we're starting to see here for the last 12 months or so, and many think going forward. The interesting thing about silver is it does act a little bit different than gold. It does tend to give a little bit more torque in the return. So if you were to go back over the last 5 bull cycles as it relates to precious metals, going all the way back to the 1970s, you would see that on average silver returns about 2 times that of gold. In this most recent rally that we find ourselves in, it's actually a little bit less. It's about 1.4 times. And another widely followed metric is the gold to silver ratio. And that's just simply how many ounces of silver to buy an ounce of gold. Traditionally, over the last 35 years, that runs at about 70. We currently are now closer to 90. So what that leads us to believe is that there's the opportunity for silver to kind of catch up to the performance that we've seen with gold in recent years. And that's a really exciting time for the fund that we've launched.
One thing I do want us all to keep in mind as we watch is the energy transition and rise of artificial intelligence are driving industrial demand for silver. What impact is this having exactly on silver?
Yeah, so the demand for silver for industrial uses now is about 55% of overall usage of silver in demand. And it really comes down to electricity and more energy needed to power. If you look at the developing countries, so technological advancements like AI, where silver is also used in the computer chips that are powering the data centers. If you look at developing countries, China, India, and other countries like that, they're increasing their standards of living, and this is requiring a lot more electricity. At the same time, we're transitioning to cleaner forms of energy, and that's requiring this large infrastructure build out. Where silver comes in is that is used very heavily in solar panels. So solar panels over the last, since 2015 actually, have seen about 28% increase annualized. So very significant growth in solar panels. In 2015, about 6% of silver was used for solar panels. Now we're at about 16%, and the forecast is for much more solar going forward.
So has the silver supply been able to keep up with the growing demand?
It's a little bit different than with other commodities. So I think the short answer is no. If you look at supply going back to 2015, we've actually seen it's pretty stagnant in the growth rate. It's actually decreased about 3% over that time. And the main reason for that is if you look at how silver is mined, it's usually a byproduct metal. So about 72% of silver is mined as a result of mining something else like zinc or copper or lead. So it makes it much more difficult for mines to expand capacity because that's not their primary economic growth driver. So for those reasons, it's been difficult to expand the supply of silver. And once we start to look at the growth in solar panels and the increased demand that we have there, and we also see that inventories have been drawn down now for the last number of years. And if we look at the silver market as a whole, each of the last 6 years it's actually been in a deficit. So there's some work to do on the miners' perspective in getting more demand to meet getting more supply rather to meet the demand.
And as I mentioned earlier, Sprott recently launched a new silver miners ETF. What can you tell us about that, Steve?
Yeah, so we're really excited about the Sprott Silver Miners and Physical Silver ETF, ticker SLVR. It's the first and only silver miners ETF out there with a dedicated physical allocation to the portfolio, and it also has a pure play focus to the miners. So basically, what the screen does, it allocates about 18% or so of the portfolio to physical silver, and then for the equity component, which makes up the other, 72% or so of the portfolio, or 82% of the portfolio, it allocates primarily to pure play equities. So The way we define pure play, it would be those companies that have at least 50% of their revenue or assets tied to mining silver, so predominantly silver companies. Now, to add a little bit of liquidity to the portfolio, we do have a small portion, no more than 15% of the portfolio, that has a 25% revenue test, and that's just to increase the investability of the universe, because it is difficult to find dedicated silver companies that have sufficient size to support a product.
Why does a pure play strategy matter so much in silver miners?
Yeah, it's particularly important in silver miners. When we go back to the byproduct story, where we have a 72% being mined as a byproduct, most of the silver companies are mining other metals. If you look at the 10 largest silver miners, none of them actually are primary silver miners. So they have other drivers of their business, and lead and zinc combined make up about 31% of their activity. So what this means is when you look at other existing silver mining ETF strategies, they tend to be much more diversified. They're investing in companies that don't necessarily have a lot of exposure to silver. In some cases, what we'll see is actually their criteria to be included in the index is that to be considered a silver miner, you just have to have economic impact based on silver. So you could be looking at companies that have a small single-digit percentage of their revenue actually coming from mining silver. So if you look at SLVR and its strategy and how that compares versus other strategies, what you'll see is SLVR strategy has about 70% allocation to silver. That's more than twice in some cases what we're seeing with other strategies. Also, it has a very low overlap with other existing ETF strategies on the market, so you're getting a differentiated product. And on the other side of that, when you look at companies that have less than 25% of their revenue tied to silver, some of the other strategies are actually having about half their portfolio invested in those types of companies. Those wouldn't meet the screen for SLVR.
So with that all being said, why do you think investors would consider adding exposure to silver to their portfolio?
Yeah, it really boils down to the two uses we talked about, first from the monetary side and the precious metals side of the equation. It is a great diversifier, so it does add that potential risk reduction within a portfolio. If you look at correlation relative to the S&P 500, it's less than 0.5. It's got negative correlation to the US dollar. For bonds, it's sub 0.4 for a correlation. And then when you look on the industrial side, because it is a pure play product and we have that 50% screen on the revenue, what we see is equities that do have a 50% screen, their all-in cost of mining is somewhere around $17.18 an ounce to mine silver. With prices currently around $32 an ounce, they could be quite profitable. And as prices continue to move higher, if that's the case, they're in a position to potentially have much stronger balance sheets and higher revenue pushing prices higher.
Steve, well, thank you so much. We're going to leave it at that. Thank you for stopping by and educating us. And that'll do it for us here at Asset TV as well. Thank you so much for watching. We hope to see you next time. Take care.